Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, July 7th, 2017. So for now, S&P 500 tested the 50-day moving average and held it. We'll look at S&P 500 as it prints a second inside week in a row. We'll look at a bunch of other funds. QQQ in particular is being held by semiconductors. There are some volume divergences that are still present in the stock market, but overall I think the evidence strongly favors the bulls. And we'll look at sector funds. Some of them are making fresh highs, and I think some of them are ready to follow higher. Now the junk bonds are possibly exhibiting a tapping pattern. We'll look at that. We had some strong selling in the treasuries, investment grade bonds, and stocks outperformed bonds for the week. The dollar is attempting to hold around November lows. We had a lot of volatility in the precious metals markets this week. Silver flash crashed 52-week lows, and we'll look at gold next. And it's kind of under pressure. I don't love the way it's acting right now. Oil gave back most of the gains. We'll look at XLE as it approaches 52-week lows. And finally, we'll wrap up with natural gas, as it's possible we're going to get a retest of June lows on natural gas. Okay, let's start with S&P 500. S&P 500 ETF SPY. So yesterday we had a retest of the 50-day moving average. We actually had another one last week. So far, both of these retests have held. The 50-day moving average has held. And, this is a bullish chart. These are fresh all-time highs a couple of weeks ago here. So we're entitled to some sort of a pullback, small sideways consolidation, perhaps, something of the nature. Basically, there is not much movement, which is kind of chopping around between 240 and 244. Overall, I think this is a bullish chart. Now, there are some divergences present. So here is a volume, advanced decline volume for S&P 500. Notice that it hasn't made a fresh high since March of this year, while the advanced decline line itself has made a fresh high on multiple occasions here. So this is one of those divergences that are going to be, I'll show them throughout today's presentation. They're still present. How much to pay attention to them is difficult to say. If both the advanced decline line and advanced decline volume were making having a divergence, I'll be more worried. But I think at the very least we have the number of stocks that are pushing higher, in good shape. As far as volume, we'll see if that actually makes a much difference or not. Here's S&P 500 on the weekly time frame, and we had another triangle consolidation. So notice that this week's range was entirely within previous week's range. We had another one here a couple of weeks ago, and we attempted to break higher, but we got sold off. So now we're basically, it's like sideways consolidation that still continues for the past, let's say, 5-6 weeks or so. And I think if we break either way, it would probably be a decent move either way. I'm guessing that we can move to R2 up here to around 25.76. If we fail here, easily we could move down to the lows here from April. Let's move on to QQQ, the technology heavy Nasdaq. So very steep advance here in April, May, June, and then we finally got selling in waves. So we had first wave, a rebound, another wave down. So right now we're kind of in the middle of this wave. So far we have not broken below May lows. Additionally, we are sort of already oversold, and you could use all kinds of indicators, but here's one. You can see it's Breadth Momentum Oscillator, intermediate term Breadth Momentum Oscillator. You can see that's already in the red territory, and last time it was red, it was around November time. So let me show you What I mean by that, so whenever it goes negative, you can say that it's oversold. So that's just one way of looking at overbought versus oversold. So you can see that advanced decline line oscillator basically was oversold here in November, and then finally we got a nice big rally that carried us to recent highs. Now we again are a bit oversold, so and we're approaching the support from May lows, so we could easily stop here and make fresh all-time highs. During the bull market, we should be looking for opportunities to buy. We should not be looking for opportunities to short. Every so often, you will be able to catch a move to the downside in a bullish security. But the vast majority of the time, it's a very difficult process, because you can see that we had, for example, strong red candles, like for example here in October, November, and then what happened? Nothing. We just made fresh highs. So in a bullish security, like for example QQQ right now, it's very difficult to look for top-end patterns. We should be what I do is I do the opposite. I look for bottom-end patterns in a bullish security, and then I'll look for buying opportunities. This is what we're doing at MasterChartsTrading.com. So yeah, we had a couple of bearish engulfing here on the weekly time frame, and so far nothing really came out of those. And I think XSD is definitely helping. Semiconductors. You can do XSD or SMH. Big part of the QQQ, big part of the Nasdaq 100. So I think it's trying to bottom here, and I think it could easily continue higher from here. New York Stock Composite Index, fresh all-time highs, actually just this week. So this is probably as broad as it's gonna get, and this is showing broad participation in the advance in the stock market. Advance. Here what I wanted to show is that we have advanced decline issues and advanced decline volume. So again, advanced decline issues are making fresh highs, but advanced decline volume has not yet made fresh highs since February. So this is a divergence, and again, I'm not sure how much to worry about it, because quite often divergences do not work out. Let's go over some of the sector funds. So here's XLF, and XLF made a fresh high, a multi-year highs here, and it's actually approaching all-time highs also. So important thing here is that XLF came down to successfully retest the April lows and did not break down. If it broke down below April lows, it would have been quite bearish for XLF and for the general market, but it didn't, and now it's moving higher. So this is good news, I think. XLY, consumer discretionary fund, also basically this is a normal pattern. We're seeing fresh highs, pullback, fresh highs, pullback. So now we're kind of basically in that area of where the bounce should occur. Of course, it could not occur. It could also break below this low, but I wouldn't start worrying about general bearishness until we see significant deterioration in the general market, and this quite honestly haven't even begun to happen. Consumer staples experienced more selling than the other funds. You can see that they came down, but they basically gave back the entire move from May, and now the XLP moved back to May lows. And again, even if we break below the May lows, even if we close below the 200-day moving average, I don't think we're going to be in a bear market. It will take a lot of energy to turn the ship around. So I would be only looking to buy. In fact, that's what we do at MasterChartsTrading.com. We look to buy during the bull markets and to short or stay out during the bear markets. IYR real estate, some pretty strong selling here, but then here on Friday already I see that there was quite a bit of buying. So maybe maybe we're done correcting and maybe we can move higher again from here. Utilities were the recipients of most selling compared to the general market. Notice that utilities hit fresh all-time highs, kind of put in possible double top here and moved lower. But same thing. These are all-time highs, so I wouldn't even contemplate a reversal until we see, well, I don't know, at the very least a close below like November lows. But this is still a bullish fund. This is still a bullish fund to me, so I'll be looking to buy it if anything. And finally, here is IYT, transportation fund. This one is quite important to the general market, and if transportation is making fresh all-time highs, I think the general economy is doing quite well. The stock market is doing quite well, and again, I would not contemplate even remotely calling this a bearish chart, and I would only look to buy this chart. So to summarize, S&P 500, most of the funds, there are pockets of weakness, and when we get to oil, I'll show you what I mean. But overall, I think stocks are very bullish, and even if we get further deterioration, I think it would be probably a good buying opportunity, if anything. Okay, let's move on to bonds, and here's junk bonds JNK on the weekly time frame. First, here what I wanted to show is that this week we had what appears to be an outside reversal, a bearish engulfing kind of pattern. So the entire previous week candle is engulfed by this week's candle. This is possibly a tapping pattern in conjunction with this a shooting star like candlestick here from a couple of weeks ago. This is a weekly chart. Now, junk bonds correlate very strongly to the S&P 500. So I think if junk bonds decide to pull back, I think it will make perfect sense for stocks to pull back as well. So whether or not this will actually materialize is another story. And additionally, how much of a pullback can we expect? For example, here is a pullback in October, November, and this was not much of a pullback. It was just a couple of weeks, 3 weeks of red candles followed by a strong surge higher. So again, I would probably not look for topping patterns. I would look for bottoming patterns on JNK and attempt to go long. Not short this chart. So we do trade this chart at MasterChartsTrading.com, and we had two positions. One was opened back in March, and the other one was just recently opened. So we'll see if this one will be successful. You never know which one will be successful, so you have to be kind of mentally prepared for failures. This business, you'll have plenty of failures, but of course you'll have plenty of successes as well. Moving on to investment grade bonds, treasuries. Here's TLT, the 20+ year treasury bond fund. So I kept pointing out a very strong buying pressure here with lots of gaps and moved to 2017 highs. Now we got lots of selling pressure, and we just kind of unraveled completely from 2017 highs for the past couple of weeks. And this is, in my opinion, very deeply oversold, and I think we could easily find support and rally higher. I think TLT are still a bullish security. Of course, we have to keep our minds open, but not so much that our brain falls out. So I'm keeping my mind open, and this is a bearish engulfing, and you can see that previous week's candle is engulfing the week before candle, and now we have a confirmation of a bearish engulfing. So we have a definite bearish engulfing pattern. Now, we had for example, here's a bearish engulfing pattern, and here's another bearish engulfing pattern back in October 2015. Notice that it didn't really account for, it didn't really come too much. It was, we had a drop few percentage points, and then we just made fresh highs. So again, I wonder what will happen. Are we going to see significant selling and continuation lower, or is this just a setup to buy? Similar patterns on LQD, investment grade corporate bonds, again pullback from all-time highs, but there is already hammer candlesticks here, hollow hammer like candlesticks. So this is possibly already people are buying here. On the weekly time frame, LQD looks similar to TLT, but even better because these are indeed fresh all-time highs. Indeed, this is a bearish engulfing, but how much should we worry about a bearish engulfing in a, well, in this case, a clearly bullish security, because these are fresh all-time highs. So I think bonds could easily find support here and rally, and this would most likely weigh on stocks. Let's move on to Forex universe. Here's US dollar on a daily time frame. So pretty clear downtrend, short-term downtrend here. We had a couple of support breaks here, and now looks like we had a rejection from the support break when we tried to rally, and so far we were rejected. Especially if we make a lower low here, I think this will confirm a support break. Now, on a longer term time frame, I could still make an argument that we are in a bull market for the US dollar, because these are multi-year highs, and this is simply a pullback from multi-year highs. Maybe this is a cup and handle. This cup here, giant cup, and this is a giant handle. Thing is, though, we broke below November lows, and this was an important low. Next important low would be around August last year lows, but by then, if we get there, we could be already approaching 52-week lows. And in general, 52-week lows is not a good sign, for any security. Here are the 52-week lows. We're kind of approaching them very close to them. So not a good sign, but not yet a nail in the coffin for US dollar bull market. Unsurprisingly, euro is moving higher and at the very least maintaining the previous week's gains. Unsurprising because US dollar is like 50% euro, if I'm not mistaken, something along the same lines. So it makes perfect sense for euro to be moving higher. What is surprising is that Japanese yen is actually moving lower. In other words, US dollar is gaining versus Japanese yen. Notice we had this big surge here over the past months or so, where US dollar was actually gaining against euro, so against the Japanese yen. So a breakout here above, let's say 114.5, 115 would be quite bullish, and we could see fresh highs, fresh 52-week highs actually. So it's kind of like a mixed bag. Versus the euro, US dollar is losing, but versus the Japanese yen, US dollar is gaining, and overall it has an effect of dollar being pressured because euro counts for more. But when we get to gold, we will see that dollar is definitely negatively correlated with gold, but over the past few weeks, actually we had positive correlation with gold. Okay, so let's start the precious metal analysis this week from silver, which I don't normally do, because silver and gold are so closely correlated that for all practical purposes they are one. But in this case, sometimes they're useful. So for example, here is silver. Today, on Friday, we had a flash crash, and silver crashed through 52-week lows. I think this is the important part here. This line here is the 52-week channel, and it crashed through 52-week lows. Now, there's a lot of stuff going on about this crash, and some of the trades that were done down below here were actually canceled by the exchange. And this is a big problem because we don't know. I mean, if the markets are manipulated to this degree that the trades are being canceled, this is not a good sign. Here, what I wanted to show that this is indeed a one-off event, and this is a flash crash, and we rallied from this crash. But overall, if we say that silver is going to be leading gold, then silver hitting fresh lows is not a good sign for gold. So here's gold on a daily time frame. Notice that today on Friday we closed at 1209.70, and this is indeed below May lows. Not a good sign also, because if this is a double top, then we're making a lower low, then we could maybe we're switching trends from the uptrend to the downtrend. Now, for now, I'm still treating gold as a bullish security, and I'm still looking to go long. But we cannot ignore this resistance up here. This is resistance in for GLD around 124, 123 and a half or so. Notice that 3 times in a row we were first when we broke support here in October. This was broken support. Now it becomes resistance. Resistance, resistance. So now we have 3 instances of resistance reaffirming itself, and now we're making a lower low. So this is not a very good sign, honestly. Overall, long term, now I have my own market breadth index proprietary indicator, which takes into consideration not only the price of gold, but also gold miners' market breadth figures. And on this chart, you can see that according to this indicator, we were in a bear market, clear bear market back all the way from 2012 until about 2016. So all of these rallies I would have shorted if I was trading gold back then. Vice versa, right now, I still think we're in a bull market for gold, but we are weakening yet again. Notice that we were at 4 and now we're back at 3. This indicator can only go as high as 4. So not a good sign. Here's GDX. GDX fared a little better because GDX did not close below May low, so at least that's a good sign. But it's not a great chart. It's kind of this has a bit of a downward trajectory, I guess is the word. So let me show you my next chart, which is well, this is a weekly chart, which is actually a big deal, I think. Here is the weekly time frame, and last week I pointed out that we had an inside week, or you can also say that this is a triangle consolidation, where last week was inside the previous week's range. Now, if we broke to the upside, it would have been a great thing, because most likely we would have re-challenged this highs at 25.80, 25.70. Clearly that did not happen. In fact, we gapped down and closed near the lows of the week. We are very close to May and March lows. And once again, let me put on a 52-week indicator channel, 52-week channel. If we break below these lows here from May and from March, 52-week lows are very close, and we could easily start putting in fresh 52-week lows. And once again, it's not a good sign when a security hits 52-week lows. Finally, here is a bunch of my proprietary indicators. The gold breadth index I already showed, still bullish, but this could change very rapidly. In fact, here's a couple of indicators. Now, this one is a bit of a more short-term indicator. It's percentage of stocks on a buy signal. Notice that we surged last, a few weeks ago, and we failed, and we again at 0. Additionally, we are we're decently oversold based on in this indicator, which is intermediate term Bread's momentum oscillator, which is an oscillator of the advanced decline line. What worries me the most, of course, is this GBI raw data, which is also one of the indicators that comprises the total GBI gold breadth index. Notice that it's moving lower again, and if we trigger the trigger for bear market for this indicator is 20, we're at 37.50, so we could easily get there quite fast, especially if we decide to take out the lows from May and from March. So to summarize, gold and gold miners could be in a world of pain if we continue lower, but there is still a chance that we pull out of this and move to the upside. Let's move on to hard commodities. This is light crude oil, West Texas Intermediate light crude oil. In my opinion, light crude oil is in a bear market, in a downtrend. Now, this rally from mid-June till beginning of July had all the classical characteristics of a short covering rally. Very steep, very quick, but now it looks like it's already petering out and we're seeing some selling. Now, generally speaking, I mean, we were trading, I shorted oil around here. So I was riding this move down all the way, and then I closed the position relatively recently. Right now, for my taste, oil is sort of in between, and it's not really overbought enough for me to be interested in shorting it. And obviously, I don't want to buy it on the long side because I think it's bearish. So I am kind of just on the sidelines watching which way it will go. Maybe it'll just make fresh lows. That's also possible. Hopefully, though, we'll see a surge higher so that we can open a short position. And we do trade at MasterChartsTrading.com via SCO, short crude oil. Weekly time frame, in my opinion, pretty clear downtrend. Despite the fact that these are 52-week highs, I still think that this is a downtrend in security. Just because of the shape of the chart and fundamentals of the oil production. You know, United States producers we're actually exporting oil. The United States is actually exporting oil, which was unheard of even 10 years ago. And another reason why I don't think energy or oil producers, for that matter, have turned around, and I think we're going to continue lower, is XLE. Notice that we made a fresh low here for the move. These are not yet 52-week lows, but they're literally a few less than a percent, I think, away from 52-week lows. Additionally, the advanced decline lines are making fresh lows, so this is not a good sign either. Here is the weekly chart of XLE graphed together with West Texas Intermediate. Notice that XLE tapped out here in December of last year and did nothing but slide down. Very similar pattern to the one back in 2015. Notice that it was sliding, finally hit 52-week low and just unraveled completely together with oil. And I am now wondering if we're going to get something along the same lines. We're very close to 52-week lows. Again, I would seriously caution against trying to bottom pick this fund, because you could easily get wiped out. Natural gas on a daily time frame. This is continuous contract on a daily time frame. So I thought we bottomed here. I thought we had this big gap here. Very volatile. Notice how we had a gap here and gap down here in June, moved lower, then gapped up, moved higher, and then gapped down, and then moved down below the June lows. So I would strongly discourage new traders from trading this at all. Just stay out of it, basically. Anyways, here I think we're headed for a retest of February lows. It is increasingly looking that way because there's not much support anywhere along these lines here. I think this good support lies here in February lows. If we get there, now that could be kind of bad, especially if we get to the 52-week or to the February lows and we decide to move lower, then I think we can have a head and shoulders kind of pattern. Here's the head, here's the left shoulder, and here's the right shoulder. Now the right shoulder again is not yet complete, and we have to get to around 2.5, 2.6 and then break below. And then indeed, if that's head and shoulders, we could see substantial downside, and obviously that would be already bearish for the market of natural gas. And here I wanted to show a difference between natural gas spot price versus UNG. UNG is one of those funds that I hate basically, but there is not many other opportunities to trade it on retail level unless you have a futures account. That's a different story. But if you're trying to do natural gas on retail level, you're pretty much stuck with UNG, unless you want to do UGAS, which is even worse. It's a leveraged fund. So here, notice that we are kind of well above 52-week lows, but notice that we're already approaching 52-week lows. Oh, in fact, these are 52-week lows on UNG here. So this fund, there's a lot of slippage in UNG, and that's the reason why I don't like trading it that much. But occasionally, it's kind of cool to take a position in UNG and get like very small short-term gains. But longer term, I would not hold it for probably more than a few weeks at a time. Anyways, that's it for this week's recap. Please hit the like button below. If you have any comments, and I mean any comments, especially if they are productive, do share them below. And of course, if you found this video valuable, then retweet or share it on your social media accounts. Thanks for watching and have another great trading week. Bye-bye. So I wanted to show you how to find us on the internet. Please go to MasterChartsTrading.com. We do have a trade alert services which are live right now, so please consider signing up for the service. It's only $24.95 per month. Also, if you sign up for our mailing list, you get a discounted membership. You get to see what I'm buying and selling and which funds I'm looking at, potential buys, sells, etc. There's quite a bit of members-only content once you log in. There's a lot of information about risk control, which is actually extremely important for traders, because the preservation of capital is really one of the paramount to the success as trading. There's quite a bit of psychology of videos, psychology of trading videos in the members only section as well. Also, I'm going to be starting a Dividend Aristocrats service. For now, it's free for the members that are logged in, that are already paying members, so that's another benefit to signing up soon. The blog section shows the previous posts and market videos, of course. Also, I've added a new section here, which is FAQs, and I do get quite a bit of questions about various, ideas and questions about the market. So if you do have a question, please don't hesitate to send it in. Send it here, and hopefully I'll be able to answer it for you. All right. Thanks for watching, and please consider signing up for the trade alert services. Bye-bye.